right, 2026, we're back. We're back. Being on since, I want to say, August, September, October, November of last year. So, took a good 6 months off. Not 6 months, but 6 weeks off. At least 6 weeks. And now we're back, so. So, Maduro was captured yesterday. Not yesterday, but Saturday. Made a lot of headlines. Trump speaks today too, and then we have non-farm payroll Wednesday and Friday with unemployment claims on Thursday. So I impact news driver week this week. I usually don't tread when the news comes out. So usually a lot of news that come out before I think about trading anything. So able to get the ranges indicator working. So we're looking at here and here. Well, not here, but this here and this here. Well, this here and this here. So got that working using the app sheets to collect that information. Google app sheet. If you don't know, look it up. Look it up. Look it up. So the objective for today is just to. I'm chilling. I might press a button or two or here or there. Not with this. And we can reset this. This is the balance to $1,000. What we want to do for this week, week, the following is just get used to pressing the button, get used to sticking to that higher time frame to navigate us, help us pinpoint where we need to be looking for positions, that type of stuff. This chart here is rather important because on the monthly we just hit our terminus. Right, we just hit our terminus on a monthly. I don't know which one it is. Maybe it's this one here. Or maybe something down here. Let's look at this one. So this is about. It's one of these. I don't recall which one it is though. Maybe this isn't a monthly. Maybe this is a weekly chart. Yeah, this might be it. Something arbitrary. I mean, you could take it off only for us to add it back again, but I don't recall which one it was for. I mean, I thought it was for the monthly, but you know, we just looked at the monthly and we have no confirmation that that's the case. Oh, look at that, 4 standard deviation. What do you know? So right now, as the new year has started, we're just moving sideways, consolidating in between this. What do we call this? A pendant, a bullish pennant, something to that effect. So either today or tomorrow we break out. Could come down here, take it as our liquidity here, and then run up higher. Though we do have this bullish order block we've been bouncing up against. I like how the body is closed right above it here. You know, on the weekly bullish order block. What is this date? I like that. So mark this out. Say the president's first to go higher. In addition to that, we do have this wick here on the weekly. So, in addition to the weekly constant encroachment, we can quad this out. It looks something like this. Upper quadrant is here. See how price went down there yesterday, or not yesterday, but last week. Respecting this bullish order block, so that's why I'm still bullish. Alright, monthly. Look how we went to that constant encroachment previous month. December, this boop, now we're back up again, and some took influence with the weekly and the monthly constant encroachment. Alright. Just a second, let me look at something really quickly. Alright, so now we're on a daily. I like how the most immediate price range, 5 candle run going up, come down, optical trade entry, lining up with the low of this fair value gap. Now we're working back up in this area here, back in the premium of this range here. 1, 2, 3, 4, 5 candle run down, and we're going higher. We may go lower. I can't imagine us coming down here, though we do have this suspension block here, as ICT has pointed out on a daily suspension block here. See the buyers respecting this weekly order block. So objective is to look to enter into a discount. By being in discount, we buy and we go up higher. I'm looking at, of course, this side here, these sides here, these relative equal highs up here. Right in line with this breakaway gap down here. Right. question asks is where we're coming from. You can look at this one here. So we haven't hit one standard deviation yet. So that's that. Look at this market maker model here. Stage 1, come down, swing low. Stage 2, come down, boom. Okay, alright, so we can take this off. Then we could take a look at the S&P 500, which is a little bit more cleaner, admittedly. It's much more cleaner. And just for context ranges, yes. You set them in at close on daily interval. Okay, so notice how we come up here. Well, I guess the better place to look at this would be here. And here I'm looking at the actual contract. Notice how we cannot OT down here. Boom. Buys respect is fair value gap. So I do believe you can run up here. Anyways, notice this high here, the 26th December. Take out these highs here. So that's SMT. Take us lower. Notice how we come down to this area here. Kind of like OT. Notice this close above here, about that close here. So ES is just much more cleaner than NQ. Alright, believe we can run back up here. Go for these all-time highs up here on ES. NQ still lagging behind, but I think it'll get there. And the Dow is hitting all-time highs. That's impressive. That's impressive. So it's obvious that NQ is a six sister in this case. So that's where I expect we'll go up next with NQ. NQ might have a breakout. That's what I believe. Okay. So we're back here looking at the 4-hour. All this here panned out, worked well. I'm gonna get rid of it. So again, this was a daily fair value gap we run up into. We had that big down movement. Technically, this is an inverse, given that we did close above it. Now we're just moving sideways. So we do have this new day open gap here from today's new day open gap. Then we have this wick here on the 4-hour. So this would be an area that I'm looking at. Got an alert here. What's the expiration date on this one? Next week will be fine. I wish the line would disappear after the expiration date too. So we just had a 15-minute 5 candle run. Bearish. Let's take a look at that real quickly. That's what that looks like. So, this is yesterday's low as well. So, this is our scenario. We can previous day low. So the reason why I'm adding alerts is in the event that I have to switch screens to something else. That type of thing. Alright, I don't want to have to continue to select the date, so I'll just delete the line when I'm ready to delete it. Notify NAB. That's fine. Though we can add placeholders. Looking at this here. Okay, so that's that there. I do have alerts on the new week opening gap here. But for us to run lower, it is possible. We'll be down here. Hurts my eye. All these new day opening gaps. Out this one, boom. So we look on a daily. Oh, this isn't a previous day low. This is the current day's low. That's fine. We could just move this down here. I don't at all expect price to come down here. I don't expect it. So maybe we could keep it here, or rather we could keep this here. And just mark this as a 4-hour low. Right. Here we are in that suspension block. Suspension block. ICT suspension block. Alright, so that's a 4-hour. And this is the hour. A lot more on it. Like, okay, now check out these session lows. Afternoon. This might have been London or Asia. We have London here. Lunch. So this high here was taken out for the AM session. So we do have this high up here. And we are at the low of this New week opening gap. One, two, three, four. Let me get a five. Come down here. Continue moving up. It's possible. So I don't see anything on the hourly specifically that draws my attention. Trying to fill in this gap here. So again, coming down here would be more of a buy for me. More of a buy for me. So we can turn this on and off. Keep it on midnight openings over here. New York open. We'll find that on the lower time frame. It's 15 here. New York low opens here. So I like how we got that 50 kind of run down. I do believe that we're gonna run up higher, continue moving up higher today. This here is thick London low down here. So let's see what we get. Do have this new day opening gap down here. Do have OT here. Mean threshold. Where's my mean threshold at? Alright, so we'll just go with this one here. When standard deviation puts us up here, new day opening gap high here. Want to reach for these highs up here. So that's how we're looking. Some areas of interest. So one of the things we could look for is some relative lows that we could very well run down into. Oh, we had an inverse fair value gap. Some lows down here. This looks like relative lows. To believe price can come down there. Tap into that. So like from 6 to 7 or 6 to 8. That's the T in this latest video. Look for some swing lows or relative lows. That's what we got down here. Even this one down here. Run down. Whoop. I'm gonna look at this really quickly. So we had this on already. Yeah, we got this on. So nothing immediate, like this is London's low down here, so that's how that's looking. This is a 5. Okay, argue this looks good here. But again, we're trying to tee off of the higher time frame, so I'm not even gonna entertain the 1 minute chart. Here's our 15. I think it'd be best served if you just focused, attention over here on the 15 and on the 5. We have our higher time frame areas drawn out. reports of interest. Even the daily, which is a little bit below us, it's down below us. We're below, down below. Right, so we can definitely set alerts on these here. Um, that's fine there. Add a ticker. So that's fine there. We could lock this. Let me just take a sip of this tea. Oh shit, just broke the tea bag. So I'll stay until like 10:30, 11. I mean like 10 o'clock. A lot of lines, right? I don't want to reduce some lines. So I'm looking at the week opening gaps. Let's take a break from these indicators. We know where we are. Just chilling right now. Run up here, came down. Bear showed up like here. Subjective is like run into a bearish PD array, go back down into a discount, which we kind of did here, right? Should have came out of this bearish fair value gap, move lower, but we're not. So that just shows strength. Here we are on the 15. 5 kind of run down, almost to 50%. And now we have this run up higher. Small little inverse on the 15. Question is, do we chase this? Market's about to open up. Can't really say that Trump's speech is much of a news driver, but nobody know what he's talking about. Looking at this on the one. Potential fair value gap here on the 15. New day opening gap. I didn't mean the new day opening gap. I meant the first presented fair value gap here. So this is the opening range gap that we're working with right here. The low on this opening range gap, surprisingly, is kind of like almost between optical trend entry and 50%. Move right to the size here from, I don't know, took those sides out. Look at this fair value gap here holding. So this is where we would get in a lot of trouble. This would be front and center on the screen. Um, Seeing these big moves up, it would be like, all right, jump in. Set the stop loss within the range. Only to get stopped out. Trying to pivot off of the 15-second or 1 minute. Only for us to come down to a higher time frame, PDRA, get supported and continue moving in the direction of our initial idea. Nothing wrong with that. Just that being on a lower time frame, you have to be in and out much more quicker. And yeah, you just have to be in and out much more quicker. Whereas on a higher time frame, it's you have to wait for higher time frame PDRAs to form. So at the close of this hour, it's gonna be a bull shorter block possibly on the 4, on the hourly, and a breakaway gap on the 15. Alright, can't really see it with this being here. So I can kind of turn this off here, and we can see it better. And takes us all the way up here. Can we get there today? Absolutely. Let's see how many points off we are. Alright, notice this here. 5 minute. Here we go on the 1 minute. Then you can sneak down, go to the, look at that inverse. Set your stop loss there. What? Alright, we'll do this. What is this? 100,000? Fine, 100,000. And I could save all the parameters now. Could add the levels here. You know, multiple positions here. So the way that this will look will be like this, like that. Stop loss it. So this is where I wanted to buy after seeing that inverse on the 15. So this is where you buy here. Put your stop loss right here. See what we get with that. So again, you put your stop loss in the fair value gap. You want it to allow space to run into that fair value gap. Alright, bar change values, volume. Care less about volume. So we have no stop loss. Stop loss is supposed to be here. So confirm. And it's supposed to get out the position, so we're out the position. Okay, so that is an example of the type of trades we would take, right? It's that we did not tee off the higher time frame. This is taking it up here will be teeing off the higher time frame. When it had a hunch, okay, 15-minute, 15-second inverse, came back down into it, valid, inverse on a 15-second valid, all within this range here on the 5-minute, fair value gap here, valid, high this new week, open gap, all those are valid, but the piece that we're missing here is the higher time frame piece, teeing off of the higher time frame, which we tried to get here on the 5, but just stopped us out. So those would be the types of trades that we get into, and then after that it'd be all right, man. We gotta try this again. Keep pushing, keep pushing, keep pushing. Just didn't work. So unless until we go to one of those areas where we have our higher time frame markings, this even looks better here on the 1 minute. So this would be try it again. Stop loss at this low here. Let's see if we come to these sides up here. This target here, though I do believe we can go up higher. I want these sides up here. I'm not even gonna lie to you. We may have to be in this trade the entire day. So we took out London highs. Next would be these sides up here. After that would be these sides up here. So no breakaway gap. We didn't get that just yet, but we do have this gap right here. Potential 5 counter run going up higher. So we'll see what happens where we are right now at this intersection with this new week opening gap, new day opening gap. All right, so there's 50 points right there. So we just hit our daily target right here. A little bit more to correct that drawdown. Question is like, do we exit the position? Everything is pointing higher. If you were in this position for a short and it's going against you, where would you ever stop loss at? Probably here. Interesting enough, where we had our stop loss at for this long was down here. And that's where we should have went in for a long, but it's fine. We're in the higher portions of this. So do we have any market structure shift here? Kind of do right here. We have these relative lows on here. Drawn liquidity. Market structure shift. Boom. So seeing those PD arrays print, it's important. You do a very good job, exceptional job at identifying the PD arrays. Where we can improve is matching those PD arrays with higher time frame PD arrays. Okay. So after we take a draw here, what can happen next? We can come down. Where could we come down to? Could very well come back down to this new week opening gap down here. We could look at a projection after we take these highs out to project this down lower, or we can come down to this new day opening gap. But it looks like we're halfway in between the high of this and the low of this here. So new horizon, as ICT calls it. That's 83 points, 50 points. That's nice. And see something like this. So we just went up. Now we're coming down. Now we're eating way out my profits and correcting drawdown. What do we do? It's that internal dialogue that gets in the way. So we took out these highs here. Right, so it could be a good area to take some off. You know, scale out. This will be a good area to scale in. We got our 5 kind of run up into this draw here. Previous day high here. So now we have to allow for these next 10 minutes to close and get this bullish order block right here on the 15. Do believe we're coming for these sides up here from last week Friday, which would be here. Right. So we just had this. See how we took out these lows on here? Swept those lows. So drawn liquidity, internal range liquidity. Now we're coming for external. I'd like to come out of this range here, so I want to see us move up higher. Oh, bullish order block. So we have 10 minutes to see what we get with these 10 minutes. So now we're in the macro session. So little drops like this is where you can add some, right? You have to be mindful your stop loss has to also curl up. So I'm gonna set this right above here. It's a free trade. We'll get another one this afternoon, and another one tomorrow, and another one day after. So don't feel guilty if that doesn't go your way. ES looking good. Q looking good. 15 looking good. So 9 more minutes. Now they're 60 points. Small little fair value gap right here. If you were to buy here, which you can. So what we should have done first is estimate where our stop loss would need to be moved to, because now we're at 2,000. So we can put him here. And we also need to understand, like, where did we average in at? Where would we have average in at? The reason I'm taking this is because this fair value gap right here and this bullish order block right here after hitting this 2-day opening gap. So the idea is to continue moving up higher, maybe move a little lower down here, but objective is to continue moving up higher. Mind you, we have this fair value gap here forming. So let's see where adding in puts us in a predicament. We're on a higher time frame. Could very well close and come down into this. Could very well come down and hit this. You continue to move it up higher. So we do have this potential breakaway gap here. All right, so we hit 3 day worths of goals right now. Right now we're at, well, technically we're at 1500. So almost 2 day worth of goals. Goals that get to 2000, rather 4000, and that would be 100 points. So numbers are there, just gotta be in alignment with it. See, 75. So right here. So this is where we average in at. I thought we got in closer to down here, so all right. Since we're looking, boom, this official. Could we come back down here and hit this and move up? We can. That'd be nasty work though. So when this hits, just 6 points off, 7 points off. That's when I'll be looking to make a move on NQ. So yeah, we can now the concept encroachment on this range right here. Let me take this off here. Though we can, we'll just replace this. Put him here. One, two, three, four. This is our 5 candle run on ES or NQ. Maybe run back down here on this fair value gap on the 5. Right, right. Mean threshold on this body here. One, two, three, four. You just run up and hit that so I can be done and go on for my day. I'm going with my day. Now I'm watching comedy. Kai Snot sleepover with at Big Kev's house. Kevin Hart with Drewski. So I like that swing low that we just made into this new day opening gap down here. So I'll move my stop loss right here, kind of right below it. And that'll work. 50 points plus our drawdown.